Welcome, trader. This is Steven with TMT. No pain, all gain. Now let's trade some knowledge. Shares are without a doubt the backbone of stock trading. To buy or sell shares of companies has been the focus of financial analysts for centuries, as well as the fortune and downfall of countless traders. On the surface, shares can appear simple, as each share represents a portion of ownership of a company. Similar to slices of a pie, all the shares of a company add up to a whole. The whole pie represents the company's total stock. Coupled together with the market price per share, you can obtain the company's total market value. But let's take a step back and look at shares from the very top. During the initial public offering process, a total fixed number of shares are authorized by the bank to be sold to the public. These are called authorized shares and represent the maximum number of shares that a company can issue. Now, just because the company has been authorized to sell a number of shares doesn't mean they have to. In fact, a large portion of authorized shares remain on the sidelines, untouched. This gives the company the flexibility to issue shares at a future date. Which brings us to issued shares, that is, shares that were sold to the public. There are three main reasons why companies will issue more shares. Reason number one is to raise capital for big expenditures, research, or investments. Reason number two is to accommodate new acquisitions or services. Reason number three is to lower the price per share to attract more investors, also known as a stock split. It's important to understand that shares can only be issued once. There's no going back. Once a share is sold to the public, it remains with the public indefinitely. Now you may be wondering, if issued shares are bought by the public, could a public company, theoretically, buy its own shares? Absolutely. The act of a company buying its own shares is referred to as a stock buyback or a share repurchase plan. Share buybacks are implemented for three main reasons. Reason number one, when a company buys its own shares, it effectively reduces the number of shares on the open market. As a result, all shareholders will experience an increase in share value. This is great for existing shareholders, and the increased value also attracts new investors. Reason number two, a company may think its shares are undervalued at the current price. Just like with traders, buying low and selling high benefits the company greatly. Reason number three, having shares on hand allows the company to control and distribute shares to its employees through stock option plans or bonuses. These shares are used as an incentive to attract new hires and keep current employees. Shares bought by the company are kept in its treasury and as such are referred to as treasury shares. Since treasury shares are tied up within the company itself, they're considered off limits to investors and viewed as unused equity capital, meaning the shares aren't being used for any economical benefit. Because of this, treasury shares are disregarded when evaluating a company's financial performance. If we remove treasury shares from the equation, what's left is referred to as outstanding shares, also called ordinary shares or common shares. Outstanding shares are just the issued shares minus the treasury shares. These are the shares that get traded time and time again on the open market. They're also the shares used to calculate major valuation metrics such as market capital, earnings per share, and book value per share. You may come across another category of shares called floating shares. Floating shares are the outstanding shares, minus closely held shares, and restricted shares. Restricted shares are shares that are unregistered until a certain condition is met. These are commonly issued to executive-level positions as an incentive to meet a goal. If that goal is met, the shares become registered and can then be traded if so desired. All in all, there are quite a few categories of shares. However, unless you're an employee of the company, the shares you'll mostly be involved with are the issued shares and the outstanding shares. That's because these two categories of shares are essential to fundamental analysis. Thanks for letting us share this knowledge with you. You're now one step closer to becoming the modern trader.